Hello everybody and welcome back to another video. In today's video we discuss everything to do with the stock, crypto and commodities markets right now and the key levels that you need to be looking at. We've got markets hitting resistance across the board and we just saw the Fed and Jerome Powell come out and basically point towards 25 basis point rate hike. The problem is that the Fed can't control the supply side. So they've got a problem here with these commodities and that could be set to rock the markets with big news soon ahead. So stay tuned as we go through everything that's coming up because there's a lot of high alert news that's about to drop. See you soon. So welcome back to our daily show where we cover off on the market close here for the 2nd of March 2022. And if you like anything to do with stocks, cryptos or commodities, please remember to subscribe. We cover it all here on the show daily. Smash the like button as well if you do get value out of the video. Here we've got a sea of green for the market close and we'll go through that in just a minute. But the big news for the day was obviously Powell testifying from the Fed and saying, hey, we're going to raise rates only by 25 basis points. That's 0.25% for March. It pretty much is locked in now. There were a few things he said. He said, we expect it will be appropriate to raise the target range for the federal funds rate at our meeting later this month. However, he then said the near-term effects of the US economy, of the invasion of Ukraine and the ongoing war, the sanctions and the events to come remain highly uncertain. So really, what's he saying? Uncertainty, uncertainty, uncertainty. Use all the tools, use all the tools, use all the tools. I mean, it's like a broken clock. If he was like reading an Audible book and that Audible book was Game of Thrones, you'd fall asleep by the first chapter. So anyway, we're into the markets. What's going on and how did the markets react to this? Well, they reacted initially incredibly positively. You can see here where he actually mentioned the 25 basis points, bam, straight back up. It basically went from flat to down to 1% up immediately, and it slowly churned higher by the end of the day. The problem is that this is not going to solve a lot of the inflation problems. It's not really going hard like I might have preferred the Fed did, but of course I'm not the one making the policy making here. And they haven't really gone hard. So you're seeing commodities react and they're just kind of going out of control again. Things like oil, which we'll take a look at soon, just really just moving up and it's gone parabolic. So we need to talk about that soon. But look, TAN was down the most. That was the solar index. It's been leading. Obviously, it's one we do like at the moment, but it was been leading and it weakened. And look at this. Look at this XME. Basically, we had metals and mining moving very heavily towards the bullish side. Financials recovered here, which is surprising because, of course, only 25 basis points. But overall, the Fed was doing its thing as per usual. And then semiconductors were up 3.27%. The problem's going to lie in the fact that we've hit a resistance on the technical analysis. But before we get into all of the market analysis, let's just talk about these inflection points in the past. And this was shared in our Discord community. And if you're not in the Discord community, jump on in there, at least get in the public one. We've got almost 7,000 people in there now, which is awesome. And there's plenty of great information that's shared on the daily, including everything to do with indices, stocks, and of course, everything else. So the PE ratio, very interesting that we are currently at where we were before the 2020 obviously crash that occurred. The 10-year treasury yield sitting about 1.8 in comparison. And it's just interesting to see these forward PEs at around similar ratios. So is there more to come to the downside? Look, there certainly could be, and a lot of it just comes to the data now because the Fed are basically being weak with their policy, and that will end up driving through to the markets, especially if we continue to see inflation accelerate, which could certainly happen here with some of the readings we're going to start getting. The average recession or average pullbacks in markets, please remember there's a difference between being a trader and an investor. And right now you're seeing an average of the pullbacks. So remember, between S&P 500 corrections since 1965, if it didn't turn out to be a recession or something like that, usually the S&P 500 wouldn't get under 15% to 20%. So it's a good time if you're looking at picking up longer term investments and you have a bullish scenario for the longer term, then it's still a decent time in these markets. They haven't exactly moved up. They're just hovering around a key resistance, and we'll talk about that soon. We've also talked about midterm election years heaps of times. This is data from 1946 to now. And what sometimes you do see, and this is, I think, if we see the breakout, you sometimes have this bullish March, April, May period, and then it tends to actually be interesting here, often weakness. And this is during the Democratic year. Very strange here, isn't it? So there has been weakness in the past that comes straight after that. And this was a general kind of concept. some type of strength coming through March into April, May, and then a possible weakness into the rest of the year. The whole stuff with the Ukraine does make this a little bit tougher. And I think also with the Fed, it makes it tougher as well, because the Fed's not really doing anything. They're kind of letting it sort itself out. And that could be the best policy. I mean, we'll find out. US 2-year versus 10-year moved closer towards the inversion point. We do not want that to invert. If that inverts, it's the massive canary in the coal mine. You do not want that to occur, because if it happens, it's basically predicting a recession. It's very good at doing so. It's just usually a little bit early. In terms of things that have inverted, obviously the 20, 30-year bond yields here, they continue to be inverted. Not a good sign in terms of the markets, and that often is a bit of a precursor of problems. We saw that happen though in November, so it just continues to be inverted at this point. VIX dropped throughout the session. It dropped from around 34 down to 30 as we got some clarity from the Fed. Really think of markets this way. If there's uncertainty, they like to go down. If there's some form of certainty, even if it's not that good news, they like to go up, and that's a huge part of it. It's not, I don't think the market sees this as a positive, but they certainly do like to know what's going on, and that's what we've done, and that's what we've gotten at this stage. PCC remains at 0.93, so still quite a lot of calls in comparison to the puts. So I think when we get the reading of the big news coming out on Friday morning, that could have a real effect on the markets here. And we'll move over now to gold. So in the previous video, we discussed that 1922. It looks like gold's come back to that level a few times, a little bit lower as well, and it's bounced off that zone. If you're gold bull, I think you're looking for this to get back above 1935 to feel a little bit better. And of course, if it does end up going past this 1950, then I think it actually takes out the previous high, because 1960 is unlikely to stop it if it shows this type of pullback. Effectively, it's gearing up for a larger move. So gold still looks bullish at this stage. Be careful underneath these lows here at 1914, 1915. If that gets taken out, it could really be bad. And look, at the time of this recording, wow, it's 114 now for oil. I want to drive in here to a 2-hour chart just to show the kind of volatility that we've already started to see on oil. So we saw it go from 100 all the way down to 90. That's a considerable change. Obviously, that's 10%. Then in the previous session, we saw oil go from about 6.67% down, and now it's made a new peak. This is a fairly large deal. I mean, oil now, to give you in comparison to where it's been in the past, it's now getting towards the highest point it was in 2011. And obviously the next big point is that 150 barrier. So if it gets past here, could oil go completely parabolic? We've got the OPEC meeting discussions constantly going on. And at this stage, it looks like oil is having a big hard time. And this is pushing through to things like coal as well. I would like to think of it as this way. If you look at all these markets, wheat, oil, coal, they're all parabolic. And that only ends one way. You can follow the trend, but then what will happen is it will get absolutely monstered in one session. Like you've seen it before, look at Moderna charts. And then as it turns around, what will happen is you'll get a little bit of a pickup. And if it gets monstered by a huge portion, usually it won't go all the way back to the top. It'll go like here, and that will be the end of the run. So if you want to know when the end of the run is going to be, it's that huge volatility that's going to be just massive. It will pick up most likely. It tends to do so. And then it will effectively be dead cat bouncing into that will be the peak of oil. So if you want to spot it on wheat and oil, it's a bit of a top tip. That's when you know markets are parabolic. That's for sure. It's extending, and therefore the crash, if it's going to occur, will be fast, and then it will go back. It'll have like that slingshot effect, get a lot of suckers back into the buy, and then it'll just turn over. That's how they always markets end, one of three ways, and that's certainly one of them. Let's look at Tesla. So Tesla goes and tests these highs over here. Look, Tesla's doing pretty well in the sessions. It's still fighting a lot with this zone though. So you've got kind of like a rejection candle here on the daily, then you've got a bullish kind of candle here. So if you're looking at trading Tesla, we know 945 to 950 is a huge level for it. If we put a horizontal line in here, about 890 is a big zone as well. That's the previous supports, resistance. It's a huge level in the market. So remember with Tesla, if you breach through this high, expect it to start to accelerate at least 920, if not 945. And if you start to sell off in the broader market, this still could be an interesting one to have a go at, though I'm leaning towards less negativity here just because of the oil price and the feed through or the follow through effect that that could have in terms of order sentiment, etc. for Tesla. Nvidia is hovering within the range. We've liked this zone towards the short. It's basically come back up. It's still above this, so still below the 246, 247 here. And if it does end up going back down, this could really get hit. So just remember, semiconductors in particular, especially Nvidia, even though it's a great company, still is looking a little bit shaky there. So this is just a pickup from the community. And I guess what it shows is that we've got breakouts in certain markets if you know where you're looking for. Now, obviously, have you been in things like Lockheed, things like, defense stocks? I could see some real potential in those, and we might do a special on them and grab a whole bunch of European companies as well, because this is a huge move. Basically governments are going to increase their expenditure in defense by a factor of percentage points of GDP. I think everybody knows Germany just opened up and they're going to start doing it. All of the Eurozone, everyone in the world will increase after this. So it's a clear logical trade, even against the market, that defense is going to be very strong. But here's one on cybersecurity, another huge play against, of course, one of the big tools of these invasion kind of things, which is cyber threats. So the bug cybersecurity was picked up by, I think it was Nick in the room. Shout out to you, Nick. Well done. I like this a lot. And he's found a fantastic level. Obviously, he's been in it for a little bit here. But yeah, another just great spot. And it shows there's opportunity in opportunity in opportunity. And this could really be one of those counter to market conditions because of the increased expenditure throughout the world. ARKK, well, 20 moving average, weakness here. So yeah, it's not so good. Hey, it's a bit weak on the 20 moving average. We still haven't seen it go up. If you were buying yesterday, this was the level we talked about. So that 65, 60, 65, 20, it bounced straight off that and got to 67.56. So not too bad if you managed to pick that up in the morning and you like it. But until it breaches through this 71.50, I'm not feeling confident about what we call the first stage of recovery. That's where it's first stage. After this, second stage. We'll continue to follow ARK and hyper stocks, but that's how they're looking. The DAX, let's go into the indices. The DAX continues to put pressure onto the bottom side. When we're looking at the bond market, it's currently saying it's still weak. The bond traders tend to be in front, and the bond traders are currently saying through my indicators that effectively the market, they don't believe that the market deserves to be going up. They believe the market deserves to be going down or flatlining. So that's an interesting point here. If you think about the DAX though, if it breaks underneath this support and the US market hasn't gone yet, that could be an early warning sign for your day trading systems as well. Like that's a clearly very weak market there. The US 30, very similar. It went up. It hasn't done much. We're looking for a breakthrough of this point here, 34,055. If it gets through there, what happens? All of these nice rejection weeks, the weekly hammer, all of those things come to fruition. You get through the daily 20 as well. It's a great bull sign. And on the weekly, of course, based on the non-farm payroll news, if this ends up going red and negative and gets under this zone here, this could be a full-on Wyckoff, and that would be a big negative sign. So I can see cases here for the bulls and the bears, and I think that's the problem. It's incredibly convoluted. The market almost doesn't even know what it wants to do. So sometimes traders choose not to be involved in this market until decisions are made. And I don't blame you. It's a tough one. It is, because it's up, down, up, down, up, down, but in a small range in comparison to what it has been in previous days. The IWM, the Russell 2000, we've got here the 209, 210 level. Obviously, if it breaches that, the bull case scenario, and if it just starts to flow back over, that could be, again, weakness, but I think other markets will show us better there. And then we'll move over to the Nasdaq here, downward trend line through the last couple of peaks. We're at the resistance. We've got a 20 moving average sitting just above. That's the daily moving average here, big resistance point for it. And when we start to think about the interactions with this zone, I'll actually use the futures just to show you this. You can really see that this market is, it's fighting with itself. It's like, okay, if we get through these highs, all right, we're allowed to then go to 14,600 or something like that. You know, that's a very logical conclusion after this. We've got this potential of the futures inverse head and shoulders. We've talked about that. Left shoulder, head, right shoulder. But if the bears get control of this market, they're going to try to push it here towards the short. And obviously they get underneath this point here. What's going to happen? this might be a little bit of a drop, but it could really start to fall over. So it's a good day trade coming up here. Whether it's a breach up and we move higher, or the breach underneath and we move lower, I don't think many traders probably care, because investors care, but traders may not. And this is what you're doing. You're really just trying to figure out key zones. We're getting a lot more clarity after the last session of the key resistance and the key support. So I think that's going to be very important to look at. The S&P 500 is more of the same. Daily 20 moving average, current resistance. You'll see that it ended up selling off a little bit there into the close just to maintain that as a big point. And it's super obvious. You know, this is a big deal. And imagine if you were short, if it got underneath 42.80. Would you have a smiley face if you were short? I'm sure you would, because that would be a big deal. It's like putting a double top within the direction of trend towards the downside. And that would be pointing towards quite a lot of weakness. So the Nasdaq right at resistance, probably one of the better ones to look at. The S&P 500 resisting itself. The Dow at resistance. They're all there. And why are they there? A lot of it is non-farm payrolls. But before we just look at that, it's Bitcoin. And what's Bitcoin doing? It's at the resistance of 44,000. It's rejecting this zone currently. And if this number comes out and the market, I don't know which way the market will interpret it. We can't really tell that. But if they don't like it, I would expect Bitcoin to come down just like the rest of the market would. And here we have the bull case, and that's through 46,000, creating effectively the double bottom on Bitcoin. It hasn't happened yet. We're at that critical point ahead of, guess what, the big news. Non-farm payroll employment change, 8:30 a.m., 1 hour before the market opens here in the US. Ooh, it's going to be interesting to see what happens here, because this is another big read here for the markets. And the markets are going to be super sensitive to news. So basically, once we start to see this news come out, it's going to be very sensitive, because the Fed have shown that they aren't really willing to go that hard at the moment. And therefore, what have we got? We've got a market that's stuck at a point ahead of the news. Now, in terms of anything else, if you've been following the channel, come over and follow us on FX Evolution on Twitter. It always helps us out. And come over, we share some different information there. So definitely join us. And if you've enjoyed this video, please remember to subscribe, smash that like button, and we'll see you in the next one. Bye for now.